when you first receive your HUD statement, it can be overwhelming, especially whenever you sit down to put it inside of QuickBooks. Then it gets to be more than overwhelming, whatever the next level is. So in today's video, I'm going to try to simplify it. We've went over how to do your earnest money deposit and then how that goes into your purchasing. Now we're going to go over the selling of the property. So that's the next step. There is obviously, with a long-term rental, years in there between the purchase and selling, or if you flip, a few months in between the purchase and selling that has costs incurred. We're gonna put in a little bit, but more than anything, we're just gonna skip from purchase to sell. That way you guys can kind of see the overarching how to put it inside of QuickBooks. So let's dive in. So this is the HUD statement that we're going to be using. We're going to be going over this. We purchased the property right here for $125, which, you know, we're going to be selling it for a lot more. So our property went up in value by a lot, but we purchased it for $125. We're going to sell it for $650. So first things first, we're going to put everything that's in the HUD is going to go into a journal entry. That's just way simpler that way. That way you can see it all together. Now, I've already put all of the numbers in. That way it's simple. So let's break down the numbers. Now, I don't want to make this too complicated to where it's like, oh, too many numbers. But here we go. So these first 5 lines here, we're going to be, all we're doing is taking the original purchases and what we've spent on it throughout its life off of the balance sheet. We don't want anything on the balance sheet. We want to take it all off of there because it's all moving from the balance sheet to the profit and loss statement since we're selling it. And we're going to be getting tax write-offs and all that. So first line here is what percentage of the property that you bought does the land come into. So we're going to take all that off. Whatever percentage you purchased it for and whatever percentage your CPA says the land is worth is going to go right here. And so we purchased it for $125,000. So $25,000 is going to go right here, and then $100,000 is going to go right here for the buildings. We're going to credit it because we're going to take it off of our balance sheet. The next spot is the purchase costs. So right here, purchase closing costs. So this is like your, all of the things that come into it to add up to it. Like if you had commission fees, your, property taxes, property insurance, all that stuff's going to go right there. That's going to add all up to that. And then the next line is our CapEx. So we've held this for years. Obviously it's appreciated in value, by a ton. So we've done something to it over the years. I just put some random number in here just to portray that we have, this much in there. We've put this much inside of, so say we've spent, probably all that's roof right there. We would probably say that's we replaced the roof, in the life that we had. All we've done for our CapEx is we've replaced the roof. There's obviously going to be more than that. There's going to be repairs. There's going to be more CapEx if you hold it for long enough. But for simplicity's sake, we're just going to say this is what it is. And then over time, our property has depreciated. So over time, our CPA is going to say that this property has depreciated this much every single year, and it's going to add up to this number. It's going to be a negative number on the balance sheet. That's why it's going to come over here to the debits, so we can take it off of the balance sheet, increase the number to 0. And that's what our number is that it depreciated. Now, our realized gains, we're going to take the number that we're selling it for minus whatever is this. So whatever these numbers add up to, including the minusing this, and then we're going to subtract it from our selling price, which I believe it was, hold on, $650,000. We're going to subtract it, and that's what gives us this number, this realized gains or losses, depending on if you gain money or lost money. And then it comes down to pretty much, this was where it becomes simple, because we just did a cash purchase. There is no, what do you call it, loans involved. There is no loans involved. So that's, the loan process makes it a little more complicated, but for simplicity's sake, we're gonna just make it to where it's just a cash purchase. So we're just taking our cash purchase right here, and we're taking the city taxes and we're plugging it in, and county taxes, plugging it in, and we just get that number right here. Those two, we're just plugging it into the journal entry. Simple as that. No issues there. And then same thing with commissions. Since this was just a cash purchase, we don't have to take points out. We don't have to take anything like that out. So we're just taking the number right here, settlement charges right here, because you can look down here. It's just settlement charges, and then there's nothing else. There's no state taxes, transfer taxes, none of that. It's all just right here in commissions. So that's really, really simple. We're just going to throw that right there, $39,000. Then we did have a security deposit when we purchased it. Obviously, it's probably, if you held it for long enough, you're going to be bouncing back and forth on security deposits, like refunding some, moving some to profit, yada yada. However, it worked out over the life of the property. But for when we bought it, we got $1,250 right here from the security deposit, and so it's not even on this right here technically, which we're zeroed right here, but I already had it on my QuickBooks, so to make sure that our balance sheet is zeroed out completely, had to throw it right there. And then what you do with the last little bit, this number right here, where it comes from, is the cash that's going, since you're selling, going to be going into your bank account. And if you've done all of these steps right here, you're just going to be throwing in main bank. I just put main bank, and it's going to auto-populate the cash that you should get. And I don't think that it's not going to make sense on here, because I added that some things like the CapEx. I added the CapEx. So this is the cash that's actually going to be going according to this statement. But since I added the CapEx and I added the security deposit to make it make sense for my original purchase, then it's done that. So boom, save and close. But this is general, so it's not unspecified on the profit and loss. Hit save. Now we're going to come over to our reports, standard, and then we'll see that the balance sheet has cleared off, which it should have. If it doesn't, then something's up, miscategorization or something. So here's our balance sheet. We'll filter it by class. That way we just see the property value right here. And you can see our general, which is just our business. It's this right here is what's in our bank, our main bank, just a sample bank I put in there. But here's our property, and you can see that everything is completely zeroed out from the video that we showed where we purchased it, and all of this was populated with the land, the building, closing costs, CapEx, and then depreciation that we incurred over time, I guess, and the CapEx we incurred over time. Everything is zeroed out. We never had any loans, so we didn't really have any liabilities, but everything's zeroed out, and it's all come into the net income, which is our profit and loss. And this is, we'll switch that up, display it by class again. Class here. All right, so here's what we have in our bank in our property alone. We've realized $507,644, rental income $143, which we should have got a lot more, but this was what was when we purchased it. It was prorated to us, So that's all that we put in there. Just showing from the time you purchase it to the time you sell it again. Commissions, 39,000. Repairs, there was a little bit of repairs in there. Property taxes, and the depreciation of it and what it depreciated over time. So, you know, you got that you're getting deposited this 612,775, right? But that's not your profit. You know, you have to take out everything. You don't fool yourself to think I profited, you know, 600,000. Well, it's not really quite the case, because you got to take everything out. You take all of this stuff out, and what you actually profited right here off of this specific property was 458,642. So, you know, be realistic, understand your numbers, you know, and it's just, this ain't easy. I understand it's not easy. If you need help with this, you know, subscribe. I'm going to go over more of these HUD statements. The HUD statement is obviously the hardest one, and that's why I choose to go over it. That way we can break it down. All the other statements have the same information, but it's just a little easier to read. But if you need more help and you're just like, screw it, I just want to hire somebody, check the link out in the description below. You can hire me personally. I'm taking on clients right now at Jonesbookkeeping.pro, and we can work together. But thanks for watching, and we'll catch you on the next one. I would believe if you are kind of like wondering like what is going on with the deposit, then watch this video right here. I'll link it here.